All right, guys, I want to talk to you about the market. It's really important. Please pay attention. I'm not trying to sell you anything, but I need you to pay attention. This is really, really big. Just FYI kind of stuff. The market looked like it opened higher and again went lower. It's now right at the levels where it's been the last few days. This RSI indicator is just roaring overbought. Moreover, if you look at the Russell 2000, it's barely up. Look at this. We're back in the range, and we're already coming off of oversold levels back into this zone. And the small caps are going to start putting pressure on the large caps. That is not positive. That's negative, and that's going to put added weight on the market aside from the market already being grossly overbought, okay? Not really good. This is the time. Now, you're probably saying to yourself, Roger, why are you so bearish? I'm not bearish. I just believe the market's going to come back to the 50-day moving average or the twilight zone right here between these two periods. But right now, with it being overbought, I keep saying oversold, overbought, it was oversold right here in beginning first week of August. But it's overbought right now, and it's grossly overbought. And here's the thing. You're not seeing cooperation from other major indices. If you look at, let me show you something here. I want to show you my filters here real quick. This is the ratio of stocks showing reversals. There's 45 stocks showing reversals to the downside. Let me just show you what it looks like. When stacks, now I'm speaking a different language. When you have a stock gap up in the direction of the trend and close near the bottom 20 percentile, you have 45 of them right now, about an hour before the closing bell. And stocks making new lows and gapping up to new highs, you only have 5. 45 to 5. Look at the ratio of, look at inside day low and high. Look at it, 2, 4. Sniper, 3, 4. Nothing's really out of whack. 45, 45 to 5. That's huge. That's a huge ratio. So that's telling me we can expect the market to soften up a little bit. Please pay attention to that. If I were you, next few days, I would look at sectors that are outside of the S&P 500. For example, let me give you a good example of what I would look at. Let me see here. Top ETFs to own. Russia, Taiwan, global markets, things that aren't locked into the U.S. market. These are really good ETFs to own right now. And I'm not talking about for a few days, for a few weeks. Also, pot stocks, 5G stocks. These stocks that don't have a strong correlation to the SPY, to this asset right here. Anything that has a strong correlation to the S&P 500 or to the broad S&P for the next 3, 4, 5 days, trading days, you want to avoid. You don't want to get into that right now because it's not going to be pretty. This thing is going to come down. We're overbought. We're going to move back down. I hate to sing the same song or tell you the same thing, but let me show you something else. One last thing. This is the put to call ratio. It closed at 93 yesterday. This morning, it was at 59. Now, let's go back in time. Let's go 2 years. That's right around the 2-year low, or even below the 2-year low. We're probably at a, God, this is really something. Let's go 5 years. Wow, you're talking 5-year low. This morning, the put to call ratio was at the lowest level in 5 years. That means the markets are in the most bullish phase they've been in years. And you've got potentially impeachment talks. I mean, you've got trade war. Economy is not the best position it's been in the last 40 years. It's slowing down slightly. Growth domestic product is at it's below the 2% growth. It's at 1.7 last quarter. I don't know. I wouldn't be as bullish. I would wait for a soft landing. I would wait for the S&P to move back to the 50-day line, maybe twilight zone, and then I would start accumulating. I'm not telling you we're going to have a crash. I'm not being the grim reaper here. I'm just saying let's wait for the market to cool off and step back when it's at near the 50-day or the 200-day line. Hope that helps. Folks, no matter what happens next in the markets, no matter what happens next, I expect one sector to explode higher and mint a new generation of millionaires. It's 5G and the next phase of our wireless revolution. The global market for this technology was, I repeat, was $43 billion in 2018, and I expect it to grow at an astronomical rate of 56.7% a year through 2025. That's just a few short years away. We're practically there already. Now, I just put the finishing touches on a report that explains the 5G revolution and gives away my top 3 stock picks. Don't hesitate, don't wait, don't delay. Click the button below and learn more now. Do it now.